Hey there, and welcome to another episode of REI Strategies, the show. And again, my name is Adam Holland, and I'm here with Mr. Tracy McGuire, the co-founder behind REI Strategies, and the 20-year, plus real estate investing veteran with all sorts of experience that you're going to be able to soak up the knowledge from on this very call. Tracy, welcome to the call, man. Appreciate you being here.
Yeah, thanks a lot, Adam. Thanks for having me.
Awesome. So in this particular video, we're going to talk about real estate cycles, seasons, and trends here in 2019 and going into 2020, as we were talking about a little bit before this call about the fact that it's going to be an election year. And we've also got really some of the highest costs of real estate. Real estate values have gone up considerably over the course of the last decade. So what kind of insights can you give us in terms of the existing trends and cycles in the real estate market for 2019 and beyond?
Yeah, sure, Adam. I think from my previous experience and even current experiences that right now we're currently in a seller's market where you could basically buy properties and sell them maximum profit typically, or other owners of properties who probably had them for long periods of time or even short periods of time are able to sell properties that are pretty much at retail 100% value. However, of course, we know eventually a recession is going to come, but when? Who has a crystal ball to predict that? But one thing I've seen over the past 20 years, election years, or more so than anything, the market tends to slow down around the election year. For a brief moment, probably the first 6 months of the year, we'll probably continue to see a normal pattern, but then you'll start to see it slow the closer we get to that election, because a lot of people in general, not just investors, really would like to see who's going to be president for they could have their strategy planned out to see exactly or have an idea of where the economy is going. What type of, if you want to say products or laws or whatever that may go in effect that could affect your business. Prime example, let's say when the government shut down a while back, what I do is I do a lot of FHA loans, first-time home buyers. While the government was closed, I couldn't do that. They don't want to insure those loans. So that's just an example of what possibly could happen, just depending on who's in office in the presidency. However, I try to adjust to whatever type of products that they make available for me. And I think in the upcoming year, I would think we're on a good run. I think we'll still continue to see some growth, or the market stay consistent for the next, I hope, at least 24 months. And like I said, who knows? That's strictly just my opinion. But hopefully it'll run for another 10, but that's highly unlikely, as we understand that corrections do come in all markets. And so, but when there is a correction, recession, there's still opportunity there, probably even more so, to be honest with you. The buy and hold strategy, guaranteed rents we talk about, that's a good time to capitalize off of that strategy, where you can get properties typically at a lower value, because then it's a buyer's market. So that means that you're able to buy at a good price normally, and you can probably get a better return on your investment if you're buying the properties cheaper. And typically, believe it or not, a lot of times what I've seen, the rents tend to go up in the recession, and occasionally you may see them tend to go down when we're in a good economy like we are now. However, I have not seen that this particular time as far as rents going down. This kind of ironic thing about what in my market is you're seeing the values go up and you're seeing the rents go up. That's not a good formula, really.
It's a good formula if you own the property.
That's right.
Or you're renting the property, right. So
right.
Yeah, so some of the previous conversations that we've had have been around the fact that you've been in the industry 20 years, so do the math. Clearly, right dead in the center of your career was the big, the Great Recession of 2007, 2008, 2009. That window where there was unprecedented amounts of foreclosures and everything. So I definitely want to touch on that. And then also you mentioned something like moving forward. It sounds like no matter who's in office, there's going to be opportunities. So if there's a pro-capitalism president in there, great. We're going to see, potentially continued trends of things going up. You want to continue to buy and hold, or actually even fix and flip properties while the retail values are high, so you've got better margins on that. But if there's somebody that's not, a capitalistic president in there, and they start implementing additional government policies, big government policies, and that increases government housing, that means, well, there's an opportunity there. So it doesn't really matter in the case of real estate necessarily who's elected. It doesn't matter whether the real estate market is continuing to soar or if it's going to see another crash. And I don't think we'll see another crash again, knock on wood, like back in 2007 and 8. But it sounds like either or, there's going to be opportunity. So that's kind of what I wanted you to talk a little bit more in detail about, like your experience through that 2007, 2008. I think we did even an interview with one of the Johns that I met when I was actually out in the Atlanta area last year. And you guys talked about how it was just like, it was almost even better, in your market around that time.
Almost definitely. The opportunity was there. Like I said, Adam just said, there's always opportunity in the marketplace. You just have to make your adjustments. And for me, it was so thrilling to be able to go out and purchase a property $5,000 to $20,000, $25,000. In today's market, those same houses in my marketplace, I'm not able to purchase them for that unless I really, really go to work. It's a lot of work finding properties at that price today. I'm not saying it's plentiful, but they are occasionally. You can't do that in today's marketplace. However, during the so-called Great Recession, you could buy. It was common to pay $15,000. I think that's about our average price in my marketplace for a property where I would go in, purchase this property. Probably my sweet point was $15,000 to $20,000 in renovation. Now, keep in mind, a lot of these properties did not need as much work as properties are that the properties need today in today's marketplace. The reason for that is because a lot of these properties have been fixed up and were foreclosed in a short period of time. They probably older properties, but they've probably been renovated within the past 5 years or probably less, longer, give or take. So most of the properties I was purchasing around $15,000, which is, like I said, again, was a sweet point for me. They need no more than $15,000 to $20,000 in renovations. Most of them just had all the copper taken out, things of that nature. Some vandalism, but so we were basically in a property, anywhere from $30,000 to $40,000. That was our average, around $30,000 to $40,000 in our average rents. It gotten up then to like $1,100. So you look at that, $1,100 a month return on a $40,000 investment. Wow, that wasn't bad. Yeah. And so in some cases, I'm being modest. In some cases, it's getting much more than that. $1,450. That was one of the sweet points. But if we averaged out all the rents from the portfolio that I was managing or built, it was right at $1,100, and it started. We was able to get it up as well, get the rents increased. So now, today, those same properties in some areas, I have people calling me today, offering me 3 and 4 times much that I paid for the property, or 2 or 3 times as much as I initially have in the property. And it's hard to say no, but I don't want to sell off all my portfolio. But I've sold a couple here and there where people offer me 3 to 4 times as much as I paid for the property or what I have in it. However, I still believe in long-term cash flow, residual income, as far as buy and hold. But my point is, you cash flow on the property, getting a good return on it, and you increasing the value. Equity keeps going up. So you have to keep that in mind. So just a win-win-win situation for you. So a lot of investors, including myself, I'm enjoying the ride we on now, but I'm trying to position myself for when it does make a correction, to take advantage of the opportunity, because I want to make sure you have the resources to purchase these properties, credit, or even just cash, where you can get great deals, and increase your portfolio And like me personally, I really believe in that guaranteed rents, the Section 8. And that's what I'm really looking forward to once it make another correction.
Awesome. So just getting yourself in position so you can basically take advantage of the trends no matter which way it's going. That's great.
Right.
So buy low, sell high, and then the properties that have a really good margin on it, you're keeping and you're cash flowing. And then obviously when the market recorrects again, it goes down, then it recorrects again back up. You're going to just continuously sell those properties where you had very little down on it, a huge amount of equity in it, and you get to cash out and then keep riding those waves over and over again. So instead of like, this is the market wave right here, it's really like you made this much money and on the downturn, you've got all that equity now built up, and then you ride the next wave up. So instead of you going up and down with the income of the real estate market, you're riding the trends and learning how to take advantage of the opportunities no matter which way it's going, so you can continuously, earn up. That's really awesome. Sounds really smart. So if you guys are interested in learning more about this, I know Tracy went over a lot of different things between buy and hold. We talked a little bit about fix and flip, and we talked about his guaranteed rents and automatic tenants program a little bit as well. You can learn more about this if you attend Tracy's webinar. You can go to reistrategies.com or click the link somewhere around this video. It's a completely free webinar. So, and also as soon as you register for it, you get free access to Tracy's ebook, REI Strategies as well. So go ahead, check out the website. Thanks for watching, and we'll see you guys in the next video.